What's up, Jonathan? It's Guys here. Welcome back to the channel. Today we're talking about democratizing finance and democratizing IPOs. That's right, today we're talking about Robinhood. Sorry, that's wrong Robinhood. I mean this Robinhood. As an investor, have you ever had this scenario take place? You're sitting there watching your favorite private company. Maybe it's Coinbase, maybe it's Airbnb. The company is about to IPO and you're thinking to yourself, I wish I could get in on this IPO. Now it's the day of the IPO and you see Coinbase is about to open at 250. That's the price. And you think to yourself, I wish I could have bought at 250. And then as the market opens, Coinbase immediately trades higher and higher and higher, and it closes the day at over $325 per share. You think to yourself, you missed out. And you missed out on this huge gain on day one from this brand new Coinbase IPO that you desperately wanted to be a part of. The problem is you didn't really miss out unless you're a fund, an institution, an investment bank, or a very high net worth individual. You never had a chance. If you're a normal retail investor, you didn't get asked if you wanted to buy shares. There were no shares for you to buy. You had to wait until it started trading higher on IPO day. Today I'm going to tell you how Robinhood wants to change this scenario and the feature that they just launched, Robinhood IPO Access. I'm going to tell you what it is and what it's not, why you might want to use it, why you might not want to use it, and if I think it's a game changer or not. Before we jump into the details, I hope you enjoy and finding the content beneficial to you. If you're new to the channel, what's up? My name's Jonathan. Welcome to my channel. I constantly look at market news, ask the question, what does that mean? What is the logic behind that? And what can we do with that? So what questions like this? If you're interested in these deeper questions, subscribe to my channel and leave a like rating down below. Your support will really help out my channel and help me to know that you're enjoying the content. Thank you. Let's jump into it. I will quickly explain what an IPO is and what it is not. Initial public offering, or an IPO, is a vehicle through which companies can become listed on an exchange in the United States. Companies will file their S-1 and then they'll work with investment banks, sometimes called underwriters, to move everything forward in the process. Underwriters will work with other investment banks and large funds to determine the size and the price of the IPO, meaning how many shares and what they will initially be listed at. Typically, these shares are subscribed to by funds, large institutions, high net worth individuals. The underwriter will receive fees for ensuring that the shares are placed and the initial liquidity demands are met. One reason why this is so important is because in 2020, the average first day returns for IPOs is 36%. That's a positive 36% in one day. That's a big deal. That's worth taking a look at. Robinhood plans to position themselves with the investment banks and other brokerages in order to receive shares from the subscription. Robinhood is not an underwriter. Robinhood will then allocate the shares to their customers and pass on the opportunity to Robinhood customers. Some of the details. Robinhood will not restrict which customers receive shares based on account balance. That means it won't just be the Robinhood customers with the highest account balances that get the shares. Allocation will be random and automatic. The first company to use IPO access to Robinhood or to be included in this feature was Figs. Figs went public and in its first week of trading was up almost 20%. They may not reach the 36% return level, but it's still very, very positive. So that's the good news. There are two catches. There are two gotcha moments. First, Robinhood has no guarantee of having the shares. It's up to the underwriter and investment banks to allocate the shares. They may choose not to allocate any shares to Robinhood. Second caveat is Robinhood has disclosed its so-called flipping policy. Customers are asked not to sell the shares within the first 30 days after the IPO because underwriters and issuing companies prefer to see subscribers hold onto the stock for the first 30 days. If Robinhood customers flip the stock, Robinhood may no longer receive allocations from banks and companies in the future. Robinhood plans to restrict IPO stock flippers from using future IPOs, meaning having access to IPO access, for 60 days initially for a first offense. They go on to say that Robinhood may no longer receive shares if Robinhood customers only want to flip the shares. Now let's look at why you'd want to use IPO access. Well, let's start with the first thing. We know that the first day returns averaged 36% in 2020. That's huge. That's something retail investors don't want to miss out on if they have the opportunity. We also know that some of the best companies in the world, or at least some of the largest companies in the world, have only traded for a short period of time or have never traded below their IPO price, which means if you can get in at the IPO price, you may be able to get the world's future largest companies at the cheapest price possible. Examples of the world's largest companies today are Apple, Amazon, Microsoft, Google, Facebook, Tesla, Netflix, Nvidia. All these have only traded briefly below their IPO prices. So those are the positives. Let's look at the potential negatives, the drawbacks from using IPO access. First, you are a trader and not an investor. IPO access probably isn't going to be the right tool for you because Robinhood does not want you to subscribe and then immediately sell the shares for this average 36% gain. If you do this, you will eventually be flagged by Robinhood and most certainly will lose privileges to take part in future IPOs. Robinhood has not yet said this, but it makes sense because they want to help out the majority of their customers, not just one customer looking for quick gains. We can see that the average returns in 2020 were 36% for the first day, but a few more recent examples show that the 36% rule is not a rule, it's an average. If we look at 3 recent IPOs, DoorDash, Coinbase, and Airbnb, we can see DoorDash was up on the first day of trading, but they were down after 30 days of trading. Coinbase was up first day of trading, as we stated earlier, they were up huge, but down after 30 days of trading. Airbnb is opposite. They were down in the first day of trading, and they're up after 30 days of trading. What this means is if you subscribe to all 3 of these, got shares in all 3 of these, and your plan was to hold on for 1 day and sell, you got mixed results. If your plan was to hold on for 30 days and sell to appease Robinhood and not get negative marks against you, you also had mixed results. I think Robinhood IPO Access is a giant step for retail investors, and it is not a game changer. It's a giant step because retail investors never, or almost never, have access to stocks at their IPO prices, and having access to them in the future, even if you don't get access to every IPO, would be a huge step forward and would mean being able to buy the potentially world's largest companies at their cheapest prices ever. We've seen that the world's largest companies, the most famous and marketable names, don't stay below their IPO price very long, and sometimes not at all. It's not a game changer because Robinhood does not guarantee shares. There's no way to guarantee that you will get the shares from Robinhood even if Robinhood gets shares. Therefore, with such a low probability, this cannot be a game changer. Robinhood customers who consider themselves investors could try to subscribe to every IPO that Robinhood offers and take shares whenever they can, remembering to keep position sizes small and investing for the long haul. This would be one method that Robinhood investors could use to utilize this new feature and to take advantage for the long term. What do you think? Let me know down in the comment section below. And if you're not yet a Robinhood customer but would like to use their new feature, you can use my referral link down below, which will help us both out. Thanks for joining me today. Look forward to seeing you next time. Goodbye.